Hi, this is Jay Norris, author of Mastering the Currency Market and host of Live Market Exercise at Clovernest.com. Welcome to the report. Before we get into it, I need to point out that trading involves substantial risk of loss and is not suitable for all investors. The charts we're looking at are real-time market snapshots and may not be replicated going forward. First market, the Aussie US dollar. Count me amongst the bulls on this one. You're coming up on a very pivotal area. You're on top of a very pivotal area, essentially here right around the 102 level. A couple times up here, a couple good breaks away. Each break a little bit less, though, creating a pattern of higher lows. It looks like you have some big kind of wedge pattern, rising wedge. Look that up. I think you'll see that's a bullish pattern. Generally, the market breaks out of the wedge in the same direction it was moving when the wedge was formed. In this case, for this smaller wedge right here, you were moving south to north. For the larger wedge, same story, moving south to north. So again, count me amongst the bulls. I think unless something happens to create a panic somewhere and run people into U.S. dollars, I think unless that happens, I think you're probably going to see higher prices here on the Aussie. The primary reason I say that, almost always the reason I say anything market related, is that's what price is telling me. The monthly trend is up, the weekly trend is up, the daily trend is up. Next market. It's so important too to realize that you got to remove your opinion in trading. You can never ever make a decision based on emotion either. To me, there's only four possible inputs that can influence my decision making, and those are a candle's opening price, low price, high price, closing price. That's it. Those are the only four determinants, and everything else, any tools you see on a chart of my chart are based on those four inputs. So it's price only for me, people. Here's Euro US dollar. Again, I have to say, count me amongst the bulls. Potentially a double top here. Well, that could be the case, but if it was going to do it, it would have done it. Here's 1, 2, 3. 3 days in a row, you keep hanging around up there. Maybe if you don't do it today, you have the possibility of a double top here. Overall, you have to remember you're below that maroon line, below the maroon line. My chart spells a monthly structure, monthly resistance, so you're below the monthly resistance. However, you're up on the weekly and the daily. Again, similar to the Aussie, barring something happening somewhere that runs money into U.S. dollars, barring a flight to quality, essentially, it's looking like you'll have more upside for lei euro here, given that the weekly and the daily are higher. Next market, the pound U.S. dollar. Here's another guy. I hit this one on the weekend. I was saying, people I respect are telling me that there's negative things going on in the British economy, and they're pointing to that monthly level. They're saying, hey, that's a big level if it doesn't get through there. Well, it did not get through there. This is month end. It did not get through the monthly level. However, you see a big up day like we had today, and you have to think, here's another one. I try to be as objective as I can. I'm as objective as the market allows me to be. You have the weeklies up, the dailies up here, but the monthlies down. But, if I'm going to lean one way or another, I'll take my cue from my analysis of the Australian US dollar. Count me amongst the bulls. Next market, dollar CAD. I had not really checked in on dollar CAD. I think it's going to 95, though. There you go. Look at that, falling like a knife. 97. Oh, you're getting close. 97th Street. We grew up on 98th. I grew up on 98th Street, and the school is 95th Street. So they're taking us to school on the CAD here. They're going to go to 95. Oh, there's your CAD. Next market, dollar chief. Come on, Chief. There it is. Again, you've heard me say this 100 times. you could possibly be in the midst of a big rounded bottom it's putting in here. Overall, though, yeah, I said I wasn't interested, even though it's down on the monthly, weekly, daily, down on all 3 time frames. I wasn't interested in a position down at these levels. I just think it's too cheap. I wouldn't, as I said, I wouldn't have minded day trading it from the short side. But see, now look at how this is what commodities do too. You haven't seen it lately, but when commodities get depressed, they have these tiny little ranges, and trade just dries up, and that's what we're seeing. Looks to me in the Swissy, and that's why I've been saying all along, big potential rounded bottom here, with this perhaps being the apex of that. Well, we'll just have to see. It's always a losing proposition trying to predict what a market's going to do. We're better off just sticking with what the trends are doing now. They're all down. However, I think, you know, if you really jump out and look at a monthly chart of this guy, you start to see, well, it's at that point where it's just so beat down that it just doesn't make a lot of sense to really try to hold shorts and expect for more. But boy, you never know. You just never know. But overall, it's getting pretty cheap, so that's why I'm really not advocating short positions. And you know, I haven't been crazy about being short this guy since he got below par. So there you go. You know, I'm sticking to that line that it just doesn't make sense to press it down here. Next market, dollar yen. I was hoping we see 80, the figure here, and then you get a massive double bottom. 80, the figure, was of course the 95 low. You almost got to it in November of last year. Here's another one where, you know, it's acting like a depressed commodity, and it's been a long, long time since we saw depressed commodities, but it does happen that when they get depressed, they get at levels which proved in retrospect to be a bottom. They have very small ranges. They just dry up. There's no activity volume all the way down, open interest all the way down, and they just peter away, and no one has any interest in them, and that's when they tend to bottom. And this is what reminds me here. Interesting, you have a case of a higher low, don't you? So here's a higher low to that one. Here's a higher low to that one. Here's a higher low to that one. So again, potentially a long-term, drawn-out, ugly type of market bottom for dollar yen. Hey, let's take a look at the U.S. stock market. Tomorrow's the first of the month. You guys know that's significant. But it's interesting to look at all the speculators had to jump the gun. It looks like speculators jumped the gun on Friday. I mean, it's just a lot of short cover. Every time you have one of these, it's followed by one of these. Every time you have a big breakout, it's followed by a rally, especially when it happens at the end of the month, as it did here. The beginning of the month means new flows coming into the market. So you'll see that potentially tomorrow, but they ran the shorts out early, so there's really just no one left to sell this market. And with the funds coming in tomorrow, and we've pointed this out many times, how the stock market has a penchant for being up the first of the month. Here's August 1st. Here's September 1st. Here's October 1st. There's a green bar. I had a little bit of a sell. They popped it the next day, though. But look at here's November, and here's December. And here's January and February. You see very strong pattern markets up on the first of the month. That's that you get that in U.S. stocks in a healthy bull market. Those are 401k flows coming into the market, employee stock ownership program funds, IRA funds, which tend to come in on the beginning of the month. Let's point out the bonds real quick, and then we'll wrap it up. Here's what's very significant about the bond market for currency traders right now. The monthly trend is still down. Now, if you were to, here I've actually got to go to a March chart. Futures charts record only the front month in this case, so I need to go to a March chart to accurately show you this. You're below the monthly line. So given that you're still below the monthly line here on the futures chart, the monthly trend is overall still down. I actually technically have to physically draw that monthly line in there. We'll take my word for it. Technically the monthly's down, and even if you can't see the monthly line, you can still see the price pattern here. Lower low, lower low, lower low, still lower low, but you know, getting iffy. Now this is very significant because if the bonds rally, interest rates go down, that's going to be dollar bearish. If the bonds break, that's dollar bullish. So if bonds go up, that means interest rates go down. That means the dollar goes down. So if bonds keep going down, or excuse me, if bonds keep going up, interest rates keep going down, the dollar is going to keep going down. So the currencies will be strong. If, on the other hand, this market reverses and it reverts back to its overall trend, that would be dollar bullish right now. So this is a very significant level here. Just above here. Let me put a trend line on there for you to see it. That's a significant level. So that's what everyone's watching in the financial markets now. So that's what we'll be keeping an eye on too, to see if those bonds turn lower, which would be supportive of a stronger dollar, or if they continue higher, in which case it would support the current bull markets across the board, in the majors, Aussie being the primary leader there. So hey, thank you very much. My name is Jay Norris. I wrote Mastering the Currency Market. Definitely want you to look for my new book, Mastering Trade Selection and Trade Management, which will be in bookstores in May. Thank you very much.